You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. In today's video, I want to speak about EURAUD, a quite interesting pair for a nice trading opportunity on it. So as usual, I will be providing a full educational multi-time frame analysis, both from a technical and order flow perspective, by basically checking the commitment of traders, which is what the non-commercials in the market are doing, which are the biggest speculators. So let's say the big boys and the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will be able to understand where we have the highest probabilities for a nice trading opportunity on the pair. Now, starting here from the monthly time frame, what do we have? Now here on the monthly, we can see that the market has just provided a quite strong impulse to the downside. Now, generally speaking, after the creation of an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how we have a 0.32 Fibonacci retracement, which is currently lining up exactly at this area that we still expect the market to hit, because always remember that you expect the market to retrace at least to the 0.32 of the Fibonacci taken on the impulse leg, meaning that in this case, a little bit more of a deeper retracement is definitely possible to be expected here on a EURAUD. Going down on the weekly time frame, what do we see? Now here in the weekly, we can see that at the moment the market has just broken above a quite important weekly structure area, actually historical structure level for this market. In fact, this zone was acting as very strong previous support. Here the market then broke it to the downside, and as you know, previous support, once it is broken to the downside, is turned resistance. The market tested this previous support turn resistance here, again resistance here, which now that the market has broken it to the upside, is turned support at this level. So what we expect is for the market to go for a retest of this previous resistance turn support before a rejection to the upside, possibly for the market to reach this 0.32 here from a monthly perspective. So at the moment, everything seems quite bullish, and monthly and weekly both indicate for a potential continuation to the upside. But first, we would like to see the market provide a correction for a retest of this previous resistance turn support for the market to grab some liquidity at this area before the continuation to the upside. We can also notice how the market, in providing this move to the upside, printed this overextended W formation, and after the creation of an overextended W formation, we anyway expect the market to create a retest of this level. So at the moment, everything is indicating for a short-term correction to this support and then continuation to the upside to the resistance of the 0.32 of the Fibonacci taken on the monthly impulse, as we have identified at the beginning of the video. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we see? Now here on the daily, we have spoken about a EURAUD a couple of times in the past. We spoke about EURAUD after the creation of this W formation here. I made a full breakdown explaining all the reasons for which, after this W, we expected the market to provide a correction at least to the 0.32 of the Fibonacci taken on the daily impulse before then starting the continuation to the upside. And in fact, that is exactly what the market did. The market went for a correction to this support here, actually confluence of support given by this previous resistance turn support with the 0.32 of the Fibonacci taken on the daily impulse. The market tested its zone perfectly as we wanted to see, and then started the continuation to the upside, which is what we expected anyway. And by the way, I will link in description this previous analysis so you can go and check it out for further reference and more free education. Now at the moment, here on the daily how we can be looking for the next opportunity. Now keep in mind that also here on the daily we have just broken a quite strong structure level. In fact, from here the market started this move to the downside, and as the market has now broken above this level, this previous resistance is now turned support here, meaning that we can expect the market to go for a retest of this previous resistance turn support before a rejection to the upside and for the market to hit the target that we have already identified on the monthly. We can also measure this correction because, as you know, in the market after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a 50% and 0.618 Fibonacci retracements, which are currently lining up at this area that we do expect this market to test before a rejection to the upside. So if the market will actually provide a correction to this zone, inside of here, what we will be doing with students, what we will be doing inside of this confluence of support. Now, as usual, we will be reactive and not predictive. But before I show you that, let's first go and see what we have from a COT perspective, which is the commitment of traders. So basically what hedge funds are doing in the market. Let's start from the euro. Now on the euro, what we can see is that lately long positions have been increasing from an institutional perspective. In fact, we went from having 190k long positions all the way up to having 223k long positions, with the net positions increasing from 66k to 93.9k. So the euro has been getting stronger from an institutional perspective. And if we go and see what we have on the AUD, we can see how the AUD has been dropping from 12.2k net positioning with 66k longs and 54k shorts down to 2.4k net positions with 56k shorts and 59k longs. So longs getting decreased and shorts getting increased, meaning that the euro is getting weaker and the euro is getting stronger and the AUD is getting weaker, which is great if we are to be looking for a longing opportunity, because in order for euro AUD to create a continuation to the upside, you need a strong euro and a weak AUD, which is exactly what we have from a COT perspective, as we have just seen. So if the market here will provide a correction to this area inside of here, with students, as usual, we will be monitoring price action from an intraday perspective, because monthly, weekly, and daily, those are the best timeframes from a directional perspective combined with the COT data. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So inside of this area with students, we will be monitoring price action from a 4-hour perspective and lower, waiting for the market to shift from an intraday bearish market, as we will have, to an intraday bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding Euro AUD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside, creation of a higher high and completion of the pattern at the 0.32 of the Fibonacci taken on the monthly impulse, as we identified at the beginning of the video. If you enjoyed the video, make sure that you smash that like button and comment below. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And we also have a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.